It's Thursday. That means it's time to check out some legacy charts and correlations. Starting off with the usual suspects. The VIX, which briefly dropped below 20 this week, as we see light at the end of the Corona tunnel in the United States. Very likely we see a high vaccination rate here in the next few months, which, regardless on your personal opinions of that, seems to be effective at what's been going on over the past year. So the VIX, which is the volatility index, should continue to fall. This should be bullish for crypto. Historically, that has been the case. A falling VIX is bullish. A VIX less than 15 is bullish for crypto. The Dixie correlation here, the 30-week rolling correlation, is actually declining slightly. It was ultra negative, around negative 80, negative 90%. It's now about negative 52%. So that's declining, which is a good thing because Dixie looks like it's suddenly bullish, even with Jerome Powell's comments yesterday, which I'll talk about on the next chart. But I'm less concerned with a bullish Dixie if the correlation drops off or is starting to drop off. Gold looks like it's set for the largest negative correlation on the 30-week rolling period ever. Looks like it's nearing 90% plus. Not something we see too often. Historically, not something we see lasting too often. This could be people actually dropping gold and rotating into BTC or vice versa. Very interesting if that narrative shifts from physical gold to digital gold and how that market cap will be repriced for BTC should that happen. SPX and NASDAQ continue to scream positive correlations, and I'll talk about it in the charts later on, but man, those charts, I would not want to be long up there, regardless of monetary policy and all this other stuff. The fundamentals are saying we're just going to keep printing money and prices are just going to keep rising. The technicals are saying, man, this stuff looks very overbought here. So with these high correlations, 30-week rolling, obviously this is lagging, not leading, but it suggests, much like the Dixie negative correlation or the gold negative correlation, that if SPX and NASDAQ fall significantly, then we will see a reaction on the BTC side of things. If we look at the Dixie, which looks like an altcoin, to be quite honest, the way the price action has been. Price action a few days ago, extremely bullish on Jerome Powell's comment about interest rates, very bearish. All that's essentially starting to retrace or has retraced. Crypto reacted extremely violently to this, first bullish and now it's bearish again. So most of this is news-driven random walk stuff, but on the daily chart it does look like it wants to be bullish. We'll see what actually happens. Like I said already, I'm less concerned if this is bullish on the daily and we don't actually hold that negative correlation. This is the daily chart here. This looks like it's actually going to reverse this time. It tried to reverse in August, September, October, November. It couldn't. It reversed somewhat. It's interesting that we got the massive DeFi move in January, February with Dixie. So Dixie and DeFi were actually correlated quite well on like the intraday or the daily correlations there. But now this looks like it's wanting for more to the upside. So I can't be too bullish on that for crypto, even though the negative correlation is falling. Usually signals a larger move towards other things that are bad for BTC, like treasuries and bonds and that sort of thing, or just risk off, I guess you could say. It signals risk off mentality versus a risk on mentality when the dollar is falling. Looking at gold, it had this like Toucan Sam sort of falling wedge, sigh, I don't know, whatever you want to call it, pointing to 1650. This is on the lower time frames. It had this edge-to-edge move on the weekly cloud. It still could happen. It's in the process of happening. Doesn't have the confluent bearish TK cross just yet on the weekly. This could take all of 2021 to play out, but I still expect this to break down at this point. Technically speaking, it's neutral and it's a no trade zone, but typically once this enters one edge of the cloud, it'll test the other edge of the cloud, hence the edge-to-edge trade setup. Looking at silver had its white coffee and accumulation over a 7-year period, and that broke up. It's currently in a markup phase. I'm assuming the markup phases will last shorter than the accumulation periods. So this still looks bullish. Looks way better than gold. Looks like it's on a different planet than gold. And you'd certainly expect higher highs with silver. It's just the timing component because this is going to be super slow. This is the weekly. This could, it could take 3 more months to actually break a higher high here. S&P, again, man, you get this rounded top, you get this reminiscence of head and shoulders, you get this expanding rising wedge situation, you get a bearish TK cross above the cloud, which is coming soon-ish on the daily, massive edge-to-edge move potentially, while at the same time it just keeps going up on a bear div. So I don't know, I don't feel confident that this is like a healthy bull rally here. For me, it always looks better if it retraces, if it retests support. I'd be much more comfortable buying a breakout like this, where you get this bullish TK recross, than just like buying at the highs. Especially seeing this triple top, basically, or quadruple top, just doesn't give me bullish vibes there. Nasdaq's kind of interesting because it has its bearish TK cross on the daily. If you zoom in on this, I'll talk about this on a few of the other charts, but it's got this inverted head and shoulders on a bunch of Nasdaq charts. It's got the potential for an A, B, C, D, which would be mega bearish for the Nasdaq. There's been rotation out of Nasdaq into SPX stuff, which is probably why SPX is holding up so well. While Nasdaq is dumping, Nasdaq mooned while Corona was happening. So as Corona's cooling off, Nasdaq's cooling off, all this stuff sort of is intertwined. But this is certainly not bullish. And again, you're much better off entering on a retest or confirmation of support than just buying here and hoping it goes up. So Nasdaq certainly doesn't look bullish. GME on the 4-hour, lots of red candlesticks here. I didn't trade this ever, so I'm not the person to listen to, but it certainly looks less bullish than it did on this melt up. It had an attempt at a breakup that got denied. So, if it were me and I was holding a 10x at 200, I would definitely be selling. AMC, on the other hand, actually looks pretty good. It continues, double bottom here, broke up, had this like triangle thing, broke up. Now it's got this cup and handle rising curve thing that looks like it's going to want to break up. Honestly, it looks like it's ready to test 15, 16, 17. Even BBBY, Bed Bath & Beyond, another one of these stocks that hit crazy highs, is slowly curling up here on the 12-hour, just eating away at the sellers. And maybe because, if you think about GameStop, it's hard to be bullish on this ever for any reason. The last time I went into a GameStop was probably 2005 or earlier, but I don't think anybody really uses GameStop anymore, realistically. Whereas, again, if Corona's ending in the United States, AMC, retailers like BBBY, this stuff is probably catching a bid because of, fundamental reasons more than anything. ATVI was one of the stay-at-home stocks, Activision Blizzard. They announced yesterday or the day before that they're giving their CEO a $200 million bonus, which I think is a joke, but that's a different video. Pretty convincing case for a head and shoulders here with a neckline basically at 88, 89, something like that. So it's hard to be bullish on this. And again, if you're correlating this with Corona, or if bots, whoever, I don't know, whatever the mindset of Wall Street is. I mean, look at Zoom. Zoom is way off as well. Zoom was a stay-at-home stock, as was Peloton. Peloton has this ugly looking head and shoulders. So all this stuff looks like it's ready for more doom. Zoom probably forms some sort of falling wedge and figures itself out around the 210 to 250 range. But if I was holding this, I would be nervous for sure, because this doesn't look bullish at all. And the same with ATVI. That doesn't, this doesn't scream bullish continuation up here. Certainly, it's down 10% or more from the highs already, and Peloton is down pretty significantly from its highs as well, from 170. So all those don't look so great. If we move to stocks that actually hold BTC on their balance sheet, MSTR, MicroStrategy being the most predominant of them other than Tesla. All these charts have reminiscence. This is square. All these charts have inverted head and shoulders potential as far as what to watch for here. So it's hard to be ultra bearish when I see this. You know, the expectation is bullish continuation or bullish reversal in this case. Descending volume profile on all these, by the way. You know, Tesla's got a diagonal neckline, square. The case still needs to be made for that second shoulder, but all of these look very possible for bullish continuation. And if you're bullish BTC, maybe there's some correlations there worth noting, but I thought it was interesting in all those charts. Although they look slightly different, all of them, to me, look like a pretty convincing case for an inverted head and shoulders. GBTC, much like the BTC chart on the daily, doesn't really look like anything. I mean, it looks like it wants a mean reversion, like BTC does, based on distance from the 200-day moving average. It's interesting that we had, this multi-month horizontal resistance, inverted head and shoulders, kind of a textbook one, honestly. Shoulder, 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 head. Looks much better on GBTC than it did on the BTC USD spot markets. But preceding this breakout in October, we had tons of evidence for continued technical breakouts. We had the IHS, like I said, we had this descending triangle, we had an ascending triangle, descending triangle. So it appears as though we're still in some sort of markup or continuation from this consolidation pattern that took probably a year, I guess you could measure it out as, on the traditional markets. GBTC also has about 5 to 10% discount compared to spot here. So if you're convinced that GBTC is going to survive, not investment advice, but it's a decent spot if you're looking to get in to BTC, because if this converts to parity or premium, then you've made money on the cash and carry effectively. If you're longing this and you're shorting BTC spot, or you're just buying it at a discount to buy it at a discount. ETH looks better on the mean reversion potential because it doesn't look as blown out as GBTC does. If you're measuring this as a cup and handle or inverted head and shoulders or some mess, if you take this, this high, this low, it gives you a target of 34 to 41, which would effectively be 3,400 to 4,100 on the USD side of things. I think that's fair. If this does break up, you can see the lack of conviction at these highs here, just like ETH, since January. It's done great from January to end of Feb, and then in March, everything sold off-ish again, and now we're just kind of waiting in this consolidation type pattern again. So nothing really too technical to discuss on ETH at the moment, just in a consolidation pattern. You could argue an ascending triangle here, maybe. We'll see how this plays out over the next few months into Q2, but that would be even more convincing for bullish continuation to the upside. Looking at CME futures, I talked about this on Twitter with the BTC chart. I like the possibility of a bullish continuation cup and handle situation here. We had the inverted head and shoulders that broke up and overperformed price targets. Price targets for this were basically an all-time high retest. We got that and then some. All-time high got rejected. Then we had Jay Powell's comments, and now we're trying to find this soul-searching mode as far as what are we going to do up here? Are we going to actually complete this cup handle? It's not perfect on the spot or CME futures chart, but I still think it's convincing enough to trade. So I like this target of 66 to 70 based on measured move, fibs, whatever. Sometime within the next week. I mean, this is very possible. This essentially has completed, and you can play this two ways. You're either long already with a stop loss at the bottom of the handle, or you are just kind of watching and waiting, adding to longs at this level, or just nibbling and trading it again as a breakout on any higher high at 61, something like that. And lastly, on ETH CME futures, it's still too early to look at this seriously in any way, shape, or form. But if you squint real hard and zoom out, you can kind of see this inverted head and shoulders possibility here. shoulder, head, shoulder. No, this may just be pareidolia, but it's not there, right? There's clearly something low, lower low, higher low. All I'm saying, if this makes a higher high, it just echoes everything on ETH. If ETH is ever able to make a higher high, it definitely looks like it's headed for what essentially would be a 2x from the current price. So maybe with EIP 1559 or some other catalyst, Uniswap version 3, I don't know. ETH fees right now are just disgusting. I talked about that on Twitter as well. It's just every time I want to do something that requires more than just sending ETH or sending USDC to another address, it's like, oh, that's a $300 transaction, or that's a $500 transaction. It just leaves a bad taste in your mouth. One thing else I will say, check out the ETH BTC portfolio we have on Enzyme. That'll be in the description below. It's transparent. You can copy trade me. It's non-custodial portfolio management. You can see what trades I make and when. So currently I'm contemplating ETH long-term, longer-term versus BTC. If BTC is a cup and handle, I want to be in that trade. Obviously, I want capital allocated appropriately. If ETH is ready to do something based on a catalyst, then I want to be in that appropriately. So let me know what stocks you're watching. Give me some hot stock tips in the comments below. One thing I did notice too is Wall Street Bets is kind of shying away from the GME stuff. So that may indicate a further cooling of that specific chart as the retail money is looking for the next fix. So happy trading.